Hello traders, Gary Wagner here, just about 11:45 in Honolulu, 4:45 in New York. It's Friday, happy Aloha Friday as we say on the islands, February the 3rd, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen in this market. Culminating with today's jobs report. New jobs added 227,000, beating estimates of 180,000 by a considerable amount, but also the fact that within that data set contained other data that was supportive of gold. I'm talking specifically about wages and the fact that there has been a reduced probability of a rate hike in March based upon the data that we have seen, that according to many analysts. So we had gold, which was trading under pressure for the better part of the evening session, actually close in solid positive footing, not much of a net gain, but still gaining $2 on the day at 1221.40. This, of course, is our April futures contract, COMEX futures contract, traded to a low of 1208, and it closed just a couple of dollars off of the high at 1223. Of course, at the beginning of this week, we did initiate long positions. Traders, we are long at 1203. Our stops are currently at 1180. We'll look to discuss where we're going to move our stops next week and pick up where we left off yesterday and the day before, which is our exit strategy and what price points I believe we can realistically achieve on this trade. But we've got a good trade under our belts. We've got decent profits in there. Now our job is to hold those profits and to watch them grow if gold continues to run next week. Silver also closing higher on the day, but very, very nominal move in the market, about a 7-cent gain to close at 17.50. Of course, we kind of sat on the sidelines on silver on this trade, only entering a gold trade. So traders, we are going to finish off the week with an extremely solid performance on the week. I brought up our weekly bar chart to kind of give us a snapshot. We can see this large red candle here. This is the action of President-elect Trump. In other words, during the election day. This is coming in the week of the election. Market runs up tremendously and back down. That was followed by extreme pressure in gold pricing till about January 15th, hit that low of approximately, I believe it was around 1223, and we haven't looked back since. Market is substantially higher now, trading 1222, 1221 and change as it just goes into settlement. This week's performance absolutely solid. You can see the open itself and the close, in which we saw about a 2.7% gain on the week, substantial move, closing at a new high on the week. Of course, when we consider that over the last 1, 2, 3, 4, 5, 6 weeks, we have only seen 1 week with lower pricing. Now, taking a look at the bigger picture, we've simply compressed this chart. We can absolutely see that this week's close to higher ground moved the market substantially above a former level of resistance. That resistance sits around, call it 10 or 1210, roughly in that area. I'll draw a line across this. This is a 50% retracement, and it's a 50% retracement of the large rally of last year. We can also see that when we look at this chart on a technical basis, we did have historical data really alluding to different support levels, both here right at around 1200, and as you can see, you've got a series of closes that come in here up to about 1210. So the fact that we have seen the market close above that price point to me is significant, which brings us to what I consider to be the most important part of the show, and that is our exit strategy and our upside targets based upon our current modeling. Now, I have put up a daily chart. On this chart, I do have a simple fib retracement, which goes from the beginning of the rally, which began middle of December of last year, and then peaked as the market hit about 1220, about mid-January. This rally was significant, about a $100 move, and from there we had a subsequent correction, that correction taking us down to about 1180. Now, once these two, the impulse wave as well as our corrective wave, are in place, we can then begin to forward forecast by modeling this next wave, which is an impulse wave, and it's an impulse wave that is impulse wave 3, and under under basic guidelines and modeling systems of Elliott wave theory, wave 3 cannot be the shortest of any of the impulse waves. So, based upon that, our current model and prices that we've seen, this is our updated exit strategy. I believe that there is still more upside room in the precious metals market, specifically gold. We, of course, are long roughly at 1,200. That would be right in here. In terms of different areas of resistance, we could see this particular leg of the rally kind of peak out here for a small correction. That would come in at around 1,240, so about $19 from here. So this is an area we certainly want to look at. But my belief is that in terms of a bigger picture, this rally will culminate somewhere between 1275 and 1312. 1312 is a 1.38% extension. 1275 is a 1-to-1 extension, and all we're saying there is that wave 1 and wave 2 are of equal length or distance. And the way that we create the extension is our starting point, of course, is a low. We take that to this high here at 1220, and then our starting point for the extension has to be the conclusion of this corrective wave down. That's where we get the numbers. So 61%, we're not going to see that if we have truly any kind of a wave 3 here in terms of our model. So I am looking for, as I said, about 1275. I've talked about our exit strategy throughout the week, and we are going to put in some specific targets and price orders. We'll do that next week. We will also, at the first part of the week, raise our stop up. But I think we have a great trade under our belts. And so for the weekend, maintain your current long, maintain your current stop position. In other markets that we follow, the jobs report was absolutely supportive of U.S. equities markets, which ran rampant today, closing up 186 points, back above 20,000 at 20,071. That was almost a full percentage gain, and it's back above that milestone. After trading under pressure for the first part of the week, we have seen a real solid performance of about 3% in terms of the gain in the Dow and the Standard & Poor's this week alone. 2.6% gain in gold prices this week alone. So absolutely a substantial week. NASDAQ and the S&Ps all posting positive gains on the day. And then lastly, I do want to look at the dollar because the dollar continues to trade under pressure. Now for the 5th consecutive week in a row, we have seen dollar pricing move to new lows, now trading below 100, 99.76. We'll talk about where we see support in gold and where we think it's going to go in the short term. So traders, obviously, one of the major supportive factors in gold pricing recently has been the declining U.S. dollar, continuing to trade in weakness. Now for the 5th consecutive week, we're looking at a simple bar chart. Each bar represents a week in trading, and we can absolutely see that for 1, 2, 3, 4, 5, 6, this is now the 7th week where we've had consecutively lower lows on the week as well as a lower close. In terms of levels that I'm looking at for potential support, 99 is that first real level. We're still about 0.75% away from that price point. And the other thing that we want to look at in terms of a short-term bounce, because I do think we're going to see the dollar continue to trade lower, but this is a longer-term moving average representing 28 weeks. And so if the market breaks below this, I want to see how it reacts at this particular price point, the intersection between price and a 28-week moving average. And yet another way to look at that same data is through the eyes of a Japanese average chart. And when we do that, we get a sense for the strength of a particular trend. And what we can derive from this information is we still have no upper wicks. That is strongly bearish. We still have a decent candlestick size, body size, and that tells me that the bearish sentiment existing in the dollar continues, and the momentum and strength of this downtrend is still vibrant. And that weaker dollar, of course, would fuel a foreign investment coming into U.S. equities as their buying power increases when they're funding different corporations here in the United States. That, along with an extremely strong jobs report, which we talked about earlier, did take the Dow Jones Industrial Average back above 20,000. Now, it's not a new record close because we have closed at a point a little bit higher than this. You can see it with this hash mark here and here. We've had about an equal close, but nonetheless, we are trading solidly above 20,000 once again. And the whole idea at this point is this particular price point, this milestone, 20,000, had been resistance for quite some time. 1, 2, 3, 4, 5, 6 weeks until we broke above it. That, of course, is only last week when that occurred. We had the market come back to these lower pricing at the beginning of the week, but we had an extremely solid finish on the week in equities across the board. Traders, absolutely no doubt. We have a moving target, a target that's changing day by day as we try to assess the repercussions and ramifications of our new president, President Trump, as he definitely shakes and rattles not only America here, whether he continues to polarize the factions, the political factions, and based upon the executive orders that he has been putting out, he has been using that pen in a fast and furious way. And the net outcome is still to be determined. The bottom line, as I've said in many of my statements, is that the one certainty we do have is he is our president, and his success is our success. So in these endeavors, I wish him the best, but I also believe at the same time that it is his responsibility to attempt to unify the country, and when he puts out executive orders that he knows will be a divisive action, he needs to address that. But that's neither here nor there. Solid performances in gold. That's where our position is this week. We are long at 1203. Our stops at 1180. As I spoke about, we have different targets that we're looking to achieve over the next couple of weeks. So for the weekend, maintain your current long position at 1203. Maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you next week for another daily update and review.